So I seen this video by Randy Howe and he spoke about how to stay cool, calm and collected while trading. He spoke more about the actual emotions themselves, what they mean, why they come up and things like that. So if you want to check that out, watch that. I want to speak more about things you can do or things that I've done in my trading to overcome the emotion and the psychological aspect of trading. As I would say, trading is 80% psychology and 20% actual technical analysis. So I want to start off by giving you an example of where you see these kind of things happen. Where in a trader do you see them not be cool, not be calm, not be collected? So hypothetically, let's say we have a trader who isn't cool, calm and collected. What do we see in this trader? We see over trading, maybe they're over risking, maybe they're under risking because they don't have the confidence in their strategy and they're missing out, they're leaving money on the table. What else? They're cutting their winners, they're keeping their losers to run because they're waiting for that reversals. Like, okay, maybe if I hold it a little bit longer, it will reverse and push up to my target. They, adjusting their stop losses and things like that. This is what we see in traders that need to work on their psychology. It's never a technical problem with that. Maybe they don't have a profitable strategy to begin with. I read this book by I think Tom Hugard, and it spoke about the reasons why we, let our losers run or we cut our winners and things like that, and it all comes down to avoiding pain. What I mean by that is, let's say for example you're in a trade, it's running down and drawdown, you're just losing and losing and losing, you'll see your money go down and down and down. Why might you hold that loser? You're going to hold it because you think it can reverse and you don't want to lose your money. You're avoiding pain. Let's say you're in a winning trade and it's a few points away from your take profit, but you're up $200, your take profit is $300. You're just going to close out that $200 because you don't want to lose that potential $200 that is floating right now. Why are you doing that? To avoid pain. Why do people overtrade? You can be losing and losing and losing, but you're going to take more setups and more setups and more setups because you think that the more you take, you're going to hit that big winner and you're going to cover all of them losses. You're doing that to avoid pain. Why do you over risk? Because you think that you can hit that big winner and you're not going to lose all your money. Especially we see over risking happening when people hit losing streaks. If you hit losing streaks, you need to lower your risk and you need to reevaluate what's happening. What also happens is when people are in winning streaks, they don't up their risk. If you're winning, you should double down on yourself. I'm not saying risk 2 times, but double down on yourself because you're in a winning streak and you're winning at the moment. And we see people actually tend to lower their risk when they're winning. Why? Because they don't want to risk that potential profit that they've just made. It comes down to avoiding pain. That's the main thing. Now, overtrading, I've never really had to deal with overtrading because I've always had a trading plan that says, you have a maximum of this amount of setups a day, or you have a maximum of, 2 setups, 3 setups that you can take a day. I did also try at one point taking unlimited setups a day, and I'm okay with that because I know what is an A plus setup, and if I keep shooting, the strategy will play out eventually. I know my odds. I have a lot of data on it, but I think for me personally, 2 trades max, 3 trades max a day is absolutely fine with me. If I lose 2 times in a row, I'm okay with stepping away from the charts and just seeing, could I have improved that day? Did anything go wrong, or was it just a probabilistic loss? Which most of the time it is, but it's still good to make them to go through your journal and to see them trades and see, okay, should I have taken more setups today? Should I have taken less? Did I rush into this second setup because the first one lost? Or, did I miss out on a second setup because the first one won and I wanted to keep my profit instead of reapplying that risk and things like that. So that's to do with overtrading, which I think is quite a simple fix because you should know I've taken 2 setups. I'm not going to take any more setups. I've lost twice now. I've lost once and I'm only taking 1 trade a day. You should know that. I think that's one of the easiest to fix. I think one of the most difficult to fix is letting your winners run. This is very hard because say your first target is 1-to-1 and you do something at 1-to-1, whether that is taking out partials, moving stop loss to break even, or whatever you do at 1-to-1, you need to let the winners run. Otherwise, it's not going to go in your favor. Back to Tom Hugard's book, which is Best Losers Win. How he determines if winners should run is use technical analysis. Do you target the highs? Do you target a fair value gap? For me, because I trade fair value gaps? Do I target in a higher time frame demand or supply because I trade supply and demand? Let the technical analysis tell you where to get out of that trade. You don't know where the market is going to go to. The only thing that you can control is how much you lose, how much you risk on a setup, where your stop loss is. I don't think you should necessarily be targeting a take profit. I think take profit can be different. Sometimes the trade's only going to go for a 1-to-1. Sometimes that trade's going to go for a 1-to-5. You want to at least be able to catch a 1-to-3 sometimes when that goes for a 1-to-5, depending on your strategy. And I think this is to do with a lot of people as well. Like pretty much all traders need to let their winners run and not necessarily cut your losses. Maybe even hit stop loss. Or I know some traders that are very profitable that cut their losses. I think that's really just dependent on you and not the strategy itself or the psychology. The next one is moving your stop loss, or just keep bringing your stop loss down or keep bringing your stop loss up, which means that now you're risking bigger and bigger and bigger amounts. I think this comes from one thing, and that's not setting the risk before you get into the trade. If you enter a trade and you say, okay, I'm risking $100 on this setup, if now you're down $90, you shouldn't be moving that stop loss to now risking $150 because you want a bit more leeway. You think your stop loss is too tight. This comes from getting the back testing data. A lot of it is simply solved by having back testing data and having the data on your strategy. Do you have like hundreds and hundreds of trades to show that mathematically over and over and over and over this will perform? This will generate you profits. Do you know the average losing streak that you're going to go into? Do you know the average month percent return that you're going to make? Things like that. Do you know your win rate? This is the main thing that builds up confidence for a lot of traders and stops these little habits that are really stopping them and slowing them down from reaching profitability. But once again, with the stop loss thing, I would just say once you set your stop loss, leave it. Don't move it to where you're risking more. If anything, you should be moving your stop loss up, maybe moving to break even at certain points, or moving it a little bit into a little bit up, so you're not risking as much. The only thing that I would say is something that I do, and Tom Hugo speaks about it as well, is adding to your position. If you're adding to your position and now you're risking a little bit more, I think your stop loss needs to be moved anyway. But that's the only time I think you can add more risk to the table, is if you're adding to your position. But once again, you need to have the data on this. You can't just be adding to your position just to add to the position. You need to have the mathematical data on, is this going to work, and is this more profitable for me, or am I just going to be losing more money in the long run? So where does it stem from? Once again, I think it's a lack of courage and a lack of confidence, and I think both of them you get from back testing and get from the data, and I think that's the main thing. And also from journaling your trades. Don't just be taking trades live. Once you take that trade, journal it. I make a video journal, and after every single trading day, I upload a video journal in the Discord server. But a lot of people I know use Notion. That's what I recommend. I've got a video on Notion, and it's got back testing features, journaling features that a lot of you can use, where you can upload pictures, you can write all your entry entry criteria, exit criteria, how much profit you made, and things like this, how you felt during the trade. I think this is very, very, very useful, and I would recommend pretty much everyone to use this. But I do video journals because that works for me better, and I like to watch it back and see exactly how I was thinking and my thought process while getting into these trades and while being in these trades. On top of that, and the main thing I want to speak about, is you just need to accept the risk. You need to accept the risk, and you need to not have a target. You don't know where the market is going to go to. So if you're trading 1-to-2s, try push for a little bit more sometimes. If you're trading 1-to-1s, definitely try push for a little bit more. If you're going for super, super, super high targets, I don't know what to say, because I don't know any, I don't trade a high risk reward, like super, super, super high risk reward, like 1-to-8, 1-to-9, 1-to-10, but I know some people do that. I don't know if they let their winners run because their winners are already quite big, but I still think even then you should be letting your winners run. If you're targeting a 1-to-8 and you're hitting this 10% of the time, you want to try and maximize that 10%. You want to try and push for a little bit more and things like that. But this all comes down to having your data and knowing, okay, when I have these high targets, or even when I have low targets, where can I get out at? Where does price usually go to and stop before it comes down and stops me out? Where's the maximum that I can target? And things like that. Don't just make a strategy over what you think the market will do or how you think the market will perform, because the market will not perform how you think it will. The market goes on data and patterns and things that happen over and over and over again. So that's basically it. If you do want to see the video on the Notion template, how to use the backtesting software that I use on Notion, the journaling, it has loads of different things like setting tasks up for yourself and everything like that, then I will have a video on screen now. Make sure to click on that. If not, just like, subscribe, drop a comment, tell me what else you want to see.